Hi traders and welcome to the Technical Analysis Market Watch on Friday the 9th of May. So I've seen a lot of very key levels get hit this week. We've seen some very good market movement actually. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've seen some really good movement throughout the week. The level that we talked about last week was the 65 cent mark, got hit throughout the week, and it sold off exactly to the point where it broke through. So really, from a technical standpoint, this is a really good effect because we saw the breakout. Yeah, we were talking about how it was consolidating at a point of resistance. And once it did eventually break through, it gave us an opportunity to get that 100 points straight up to the 65. Now, it rolled over there pretty quickly and actually came all the way back down to where it actually all started. But look, that's what technical analysis is, repeatable patterns that basically hit levels and come back and test it. Now it's going to have the 20 moving average underneath it. In a matter of days, the 20 moving average will be right at that 64 cent mark as well. And if the market still hasn't moved and it starts to reverse from that point onwards, it gives us a good launching pad really to move on. Now, of course, if it breaks through and closes below it, that tells us another story, and that tells us the momentum has shifted significantly to the seller momentum. So really what we're looking for is key levels to react off. And you can see if we go to a smaller time frame, I mean, if we go to a 15-minute even, you can see that once it did actually start to sell off from the 65 cent mark, all the things we talk about every week, the pullbacks of the 20 moving average, there was about 7 different entries all the way down. So it was a really easy trade. So hopefully you're able to get hold of that. And just as importantly, it was actually the same on the way up. You can see once it did break through, we're getting the higher high, higher low sequences all the way up to the 65 cent mark. So good trading on the Aussie USD. All right, move over to the US dollar CAD. And yeah, again, a really important key was hit at around that 139.50. You can see here, we've got a nice move, bounce off the bottom. Already MACD was starting to shift upwards after the several weeks really of market movement. And we can see that all the way up to the top of the resistance zone was the target. And that only happened basically in the last day of trading. So this most recent candle is the one that really exploded. If we go to a smaller time frame again, we'll see that effect. You can see that the levels that we were talking about have been started to accelerate up, and then we started to see the higher high, higher low sequences. So really good trading on the CAD. Hopefully you were able to get hold of that, because I think that was a really nice trade. When you see a series of consolidation candles at a level of very strong support, it's a pretty comfortable trade. The 20 moving average was the clear target. I mean, that's the one that you would have gone for first, but the secondary target is that round number around that 139, it's sort of 30 to 40 area. If we get a breakthrough there, it's going to be significant, because then we can see a potential shift all the way up to the 141 again. But it needs to maintain its level above the 20 moving average of a daily close, and also it needs to really get above that 139.50. A close above 139.50 on the daily would convince me that there is enough action to push it on to the next target. If, however, it does what the Aussie did and gets a little bit of pressure here and starts to reverse, the obvious target is back down to where it started, the 130, sort of 780 to 138 level. So if we see a rollover and we start to see a series of lower highs and lower lows on a smaller time frame, we'd start aiming for that 138 again on the CAD. So pretty good from a technical standpoint, because it's behaving itself in the way that we would need it to get effective trades in. All right, we'll go over to the US dollar yen, and another really big session in the yen. Look, it's done all the things that it's needed to. We've got the higher high, higher low sequences. That was a very significant deep pullback that we saw this week, but it certainly reacted off that level, and it's pushing up very closely to our target of about 146.50. It's a very strong trade. You can look, if you go to the 1 hour, you're going to start to see the power of that move today. Again, all the things that we talk about each week, even on the way down when it was actually selling off a little bit for the retrace, you could see the pullbacks to the 20 moving average all the way down. And then once it did kick on and break past that resistance again, it started to pull the higher high and higher lows again off to the 20 moving average. Still a little bit to go before it actually hits its target, but it's got a fair bit of momentum. The last 2 days have been very strong momentum. We've got a bullish engulfing and then a very big long range candle. So the target is still 146.50. At that point, you'd either be taking profit if you're already in, or if you're not, you'd probably either wait for it to break through and test it from above, which would be the ideal trade, or indeed if it rolls over the next target on the way down to 144, and that would be the next reload zone, which is around where the 20 moving average is as well. So some good opportunities coming up on the yen, and it's behaving itself quite soundly from the technical standpoint as well, which is really good. All right, over to the dollar index now, and the dollar index is doing everything promised. It's been really, really good. It's given us the higher high, higher low sequence. It's closing above the 20 moving average, which is really, really important. But probably even more important is that it's actually getting itself above this very heavy resistance level, which was previous support. What we need to do is see a close above that 100 and probably 80 zone. Probably even the high of today's candle would be enough to convince me, because it's done a really, really good turnaround. We've seen the market tested it hit it earlier, came back and failed to make a new low, and now it's reversed itself quite significantly. So it's going to be, look, MACD's trying to shift. We're getting a little bit of movement on the 20 moving average on the daily. So for mine, it needs to do a little bit more work to convince me that it's long. There's only one candle break, and it's still right at that level. So it needs to do a little bit more. But in a perfect world, if we're seeing it above that sort of 180 level for daily close, I'd be looking for pullbacks to the smaller time frame moving averages, and look for a move all the way up to 101.80. That's the target for the dollar index. If for some reason it doesn't continue on and starts to reverse from here, and we start to see lower high and lower lows, I would be looking back at that 99.30 as the target where the previous low was. But really, we would expect the 20 moving average to help bolster it now that it's actually up above it. If we get a little bit more trading, we would expect the 20 moving average to really do its job and hold up here. So very good trading on the dollar index, which of course translates to the euro, which is the one we want to trade. And look, a break of the 20 moving average is very, very significant. We've seen the series of lower highs and lower lows. We've got the lightning bolt now, okay? So we've got the lower high, lower low sequence and a break of the 20 moving average. And look, there's a level here of support that needs to be identified. There's no question about that. That's where the previous peaks were. You can see there we've got two peaks significantly at this level, and then it did sell off. So we would expect that would be support for it now. And I'm talking about this level here around that sort of 112. What we need to do, if the dollar index is going to push on higher, this is obviously going to go lower. It has to, right? So it's the inverse. It's looking weak, and really, I think the 112 is the last point of support for it before it goes potentially all the way down to 109. So there's a 300-point gap in between the next very heavy level of support. So it's very, very important that it does either break through, and if we do see a daily break past the 112, I'd be looking for pullback opportunities on the smaller time frame to continue in that direction. Or indeed, if it finds support at the 112 level, the first target I'd be going for is the moving average actually, and at that point I'd be looking at taking profit at the moving average on the way up. But of course, if it does break through past the 112, look for smaller pullbacks to the moving average, and I'd be looking at trading opportunities all the way down to 109, I think, and that would be a really good scenario, I think, because the dollar index would at that point be traveling quite a bit higher, which would be a great result. All right, and onto the S&P 500. Look, a pretty reasonable day. Tariff trade talks were confirmed with the UK and the US today, which made the market initially spike up. Has sold off quite significantly from that spike, though. It's off nearly 50 points from the high of the day, and literally closed down now, nearly halfway mark of that range. Look, it's been trending quite a bit higher. There is resistance around this 56 to 57 area. There's no question about that. We know all of this is here. So it's certainly something to keep an eye on. The 57 is actually a level that we need to probably respect. So it has tested it and pulled back. Let's just see what it gives us next week. I think I'm a very big advocate for just trading what we see on the S&P 500 and keeping the trades relatively short, because it's still a very volatile indice that is being maneuvered on potential earnings, and also closing deals with a lot of the countries that they're trying to do in the US. So that's going to affect this market quite rapidly, if you like. So it's one that you wouldn't want to be, in my opinion, I wouldn't be wanting to take long opportunities on it and staying long for a long time. It's one of those ones where I want to be in and out relatively quickly. So I would look at it next week. If we're trading above the 5,700 next week, I'd be looking for opportunities up to 5,800, which is the next proper target zone for it. If we don't get past the 5,700 and we're rolling over and messing around at this level here, I'd be looking at trading it back down to 55.50, because I think they're the two zones between 5,800 and 55.50. They're the two zones that's going to get the most amount of action until we see a significant breakout of this level, because I think you can see a bit of consolidation happening here. So in the meantime, just play the these two levels for shorts and longs, whichever way the daily momentum is happening, and it's probably the safest way to trade the S&P 500. So I hope you had a great week's trading this week. We've seen some good levels hit, the ones we've been talking about for a few weeks now. So hopefully you're able to get hold of some of those, because they were good opportunities. Have a fantastic weekend. I look forward to seeing you all next week.